So how much longer do you think that people are going to buy this and they're not going to see that the emperor has no clothes? Because we're actually finally starting to see, inflation affect everyday prices on things, and people are starting to realize it's happening. So how much longer do you think they can get by with this, with just bullshitting the American people?
The dollar had been rallying, gold stocks had been getting crushed because of all this taper talk, because this was supposedly this tightening cycle.
So do you think that there's any hope of actually turning the economy around now that everybody is captured by this economic process we have of artificially low interest rates? Is there any way that people will ever choose to do the right thing, or are they just kind of trapped forever because of where they've ended up?
Well, I think we're kind of in a trap that we're not going to be able to get out of because of the politics that's involved. But there is a viable way out. I mean, maybe it's not viable politically, but it's viable economically. And what you said is true. Because the Fed has held interest rates artificially so low for so long, and because the government has also guaranteed a lot of the debt, so a lot of Americans can borrow money at these low interest rates, but the lenders don't even care if they can repay the money because you have government guaranteed student loans, mortgages, all sorts of borrowing that wouldn't take place absent a government guarantee. But we've got so much debt, and because interest rates have been held so low, everybody is looking for yield anywhere they can get it. And so that's enabled the securitization of high-risk consumer loans. We did that with subprime mortgages, and that resulted in the financial crisis. But that's being done now with all sorts of consumer debt, credit card debt. There's all the popular, buy now, pay later kind of stuff, or when you go into a store and you can buy, a mattress or, a refrigerator, and you don't even have to put up any money. Well, behind the scenes, all that stuff is being securitized because everybody is looking for yield, because you can't get any in the traditional places because the Fed is intervening. And so because credit has been so cheap and so plentiful, everybody is loaded up on it. So Americans have so much debt, it's impossible to pay it back. American citizens, the American government, corporations. So the only way that the debt can be serviced is if interest rates are held artificially low. And at this point, rates have to be at zero. It's even if they go to 1%, we can't afford it. So rates are locked at a rock bottom level. What we really need to do is allow interest rates to rise, and they're going to rise substantially. And when that happens, the debt would be defaulted on. And we can't move forward dragging all this debt. So the debt has to be defaulted. And that's how we get out from under the problem. Is, it's just like a jubilee. A debt, the debt goes away, but that's not, a panacea, because for every debtor there's a creditor. So when the debtors, default and get rid of their debt so that they can move forward, somebody loses, right? There are a lot of people who are on the other end of that. They're owed the money, and it's going to be a startling, wake up when they realize they're not going to get paid. Because a lot of people are counting on that money for their retirement or to fund all, insurance or all sorts of things, and we just don't have the money. But what I ultimately think is going to happen politically, because we don't have the guts to actually do that, is we're just going to keep printing money and printing money, and eventually the bottom's going to drop out of the dollar. The world's going to abandon it as a reserve currency, and it's just going to go into free fall, and debt's going to be wiped out through inflation. So the debt's going to get wiped out one way or another, either because it's defaulted because rates go up, or it's inflated away because rates never go up. But the result is the same for the creditors, the lenders. They get wiped out. Yes, they get their money back, but they can't buy anything with it, or very little with it. So they get wiped out through inflation as opposed to default. The irony is, by choosing inflation, they'll actually end up suffering more. I think the real losses due to inflation will actually exceed what the losses might have been due to default, because it wouldn't have been 100% default. It's not like the creditors would lose everything. Not everybody would be able to default, and some people would still have to pay something. So I think in real terms, a restructuring of the debt due to allowing interest rates to rise is actually better for the lenders than hyperinflation that wipes them out completely.